Unemployment rate, non-farm payroll, and average hourly earnings all coming out this week with the dollar at its lowest levels. How's that going to affect our markets? Let's talk about it here at Capital Markets. Traders, what's up guys? Welcome back to Capital Markets. It's your host here, Cleveland Bishop. Hope you guys are having a fantastic start off to the week. We've seen markets fairly calm today, but we are expecting to see a lot more volatility. All right, so if you guys are here and you're new to the channel, what's up? Make sure you guys subscribe. If you ever have any questions, please comment down below and we'll be right there to answer away. All right, so coming in this week, first, we do have some CPI coming out for Australia. Australia has been really low on the radar when it comes to volatility in 2019. Not too much price movement. There was a jolt in the Australian dollar when that yen started to move as well. That all dealt with Canada and some things that happened with Apple when they downgraded their iPhone sales worldwide. But as you guys know, markets recovered quite quickly, and we are now seeing the Australian dollar still really consolidating around where it was before that particular event. All right, but moving outside of the Australian dollar, of course, you have the New Zealand dollar as well. Those are very highly correlated pairs, all tracking what's happening in China. And again, same thing with the New Zealand dollar. We don't see much going on at the moment. So as we see more things unfold with China, we should start to see those assets start to give us a little bit more volatility. At the end of the week on Friday, we have NFP, we have average hourly earnings, and we have the unemployment rate. Last month, unemployment did tick up to 4.1%, which is quite amazing. As you guys know, we've been as low as 3.6%, and that was less than 6 months ago. So just in 2018, we were as low as 3.6, and we ticked up as high as 4.2, 4.3. So that's quite a variable range when it comes to unemployment. That did get us to the extent of how many people can truly be inside of the labor market, which usually does fluctuate around that 3.6% area. All right, so what are we expecting here for the dollar? Well, as you guys know, right now the dollar is at all-time lows in 2019. Okay, so that just gives us a lot to say, wow, if there is a lot of data that comes out on Friday that is negative, that may start to drive that dollar a little bit lower. But any kind of positive implications when it comes to that data release, well, hopefully we'll start to see more dollar strength. Now, lastly, when we're talking about the pound, so much going on with Brexit. Here's a quick screenshot of what the pound is looking like at the moment. We did see a massive run up on the pound. It's been the fastest, most bullish pair in 2019. All dealing with some of the things that have gone on with Brexit, and none of it's been so positive. So what this is telling us is that people are basically saying it can't get much worse than this, and they're already pricing in more positive implications that they may see come up in 2019, which is a deal. March 2nd, 2019, there is supposed to be a deal that is supposed to hit markets, and that is supposed to allow that British pound to start to continue to trade back to the upside. As we know, there's been over a 20% decline in that particular asset's price. And I do want to close out quickly with what's going on with the euro. Not so much. We did have an Italian referendum that's happening at the moment when it comes to their banking sector, which has kept that euro suppressed. The euro right now still at all-time lows for the past year. Okay, for the past 14 months, the euro has never been lowest than where it is right now. And you can see that on the euro USD. This is what makes us believe that the same thing that's happened with the pound when it comes to it can't get much worse than this, we think that's the same thing that's going to happen to the euro, which is going to give us a decent push back to the upside. So I would love to know your opinion on the subject. Please post your comments down below for us to start a little bit of a dialogue. And if you guys are trading these assets, I definitely recommend trading with Capital Markets, our broker. We're one of the best brokers in the entire industry. We route from some of the best liquidity providers, and we have some of the best spreads. Low cost spreads mean you guys are paying less and less per trade. Great liquidity providers mean you guys are getting filled instantaneously. Head over to capital-markets.com, and I will love to talk to you guys very, very soon.